All right, welcome everyone. We're going to get started. I think people are still filing in, but we want to get to the program. Hi, my name is Sula Kim. I'm the Assistant Dean of Graduate Programs here at the School of Professional Studies. And I want to welcome everyone to this webinar on predicting the 2020 presidential election in this tense waiting period that we're all in. We're here to learn about the innovative election forecasting method, Virtual Tout, that Tom Miller created and which has been tracking the election with hourly forecasts since September 27th. Tom will talk about how closely the outcomes we have seen so far mirror his model's predictions. And we'll have time for your questions at the end, so feel free to post your questions in the Q&A window. It should appear at the bottom of your screen. But first, a brief introduction. Thomas W. Miller is the faculty director of the Master of Science in Data Science program here in the School of Professional Studies at Northwestern. And he's been in that role since the inception of the program back in 2011, when it was called Predictive Analytics. In the decades since, he has been instrumental in keeping the data science curriculum at the forefront of the field, adding new specializations and certificates in sports analytics, data engineering, and AI, among others. Tom is also the author of 6 data science textbooks published by Pearson Education, and most recently, he launched a new journal, Data Science Quarterly, promoting data science as a discipline and showing its relevance to social and political discourse. This is where Tom's Virtual Tout forecasting can also be found. Over the past month, Tom's prediction model has been getting great news coverage, often comparing it to well-known prediction systems like 538 and The Economist. And news outlets that have covered his work include Forbes, Bloomberg Business News, BBC, and there have also been multiple interviews with Sky News and mentions in Fortune magazine. We are so fortunate to have Tom as part of SPS and thrilled for the attention that his work is getting thus far. So without further ado, Tom Miller, take it away.
Thanks, Sula. Part of that attention, of course, is that we're all thinking about the election. It's on our minds, and there's much uncertainty still, even after Tuesday. There's an information ecosystem that has evolved around news reporting of elections, and we've gotten used to it, but I'm not sure any of us really like it. We hear a lot about polls. Biden's up 8 points nationwide. We don't really know what that means. The newscasters don't either. They make disparaging comments about the polls at the very time that they're presenting them. And they cite additional polls showing that there is conflicting information from one to another. And we have now in 2 elections, primarily in the US anyway, and there's also the example of Brexit. We have seen in 2016 and most recently the failure of models for forecasting election results. And this brings a lot of concern about our use of data, concern about our ability to anticipate what's going to happen. And I think there's concern as well in the campaigns where they're looking for guidance, some sense of where they're at and where they need to go in the future. So maybe there's a better way to do it. Maybe we can use the methods of data science, gather data that makes sense and analyze those data in ways that make sense to provide information that citizens and politicians and polls and pundits can use more effectively. So in part, that's what we're on. We're on a mission to see if that's possible. We'll go through a series of examples as we proceed today, and we'll review the methods of election forecasting, general classes of methods that have been used in the past. And we'll spend a little time on predictive methods, prediction markets in particular. My guess is that many of you aren't that familiar with prediction markets. So I'm going to spend some time on those. We'll talk about the methods that we use, driven by data from prediction markets. These are Monte Carlo simulation methods. And we'll show how they play out in the forecasts that we've been providing on the Twitter Virtual Tout, and also in the journal Data Science Quarterly, the online version of that. We'll show results, and we'll show how things ended up on the morning of the last day of the election, the last day that you could vote, November 3rd. Back up one here. These are the general methods of election forecasting. There are historians that look at elections in the past, and based upon the data from those elections, try to make predictions about what's going to happen next. There are the pollsters, some of whom don't like being thought of in this context. They think of themselves more as opinion pollsters, as surveyors, rather than as people who are trying to keep track of the horse race that is the campaign. But their data are used in forecasting models. And then there are the pundits, who individually try to give their opinions, given their hopefully experience in working on campaigns or experience in being politicians themselves. And we'll see as we switch from one channel to another, pundits who are on the right side, pundits who are on the left side, groups of pundits who come up with their own consensus about what the future holds. They also attempt to make forecasts. And there are the prediction markets. A good example of the historical approach, and one that I really like quite a lot, is Lichtman's. This is the Lichtman's rendering of the history of elections. And one of the nice things about this book is it contains all of his data. So for these 13 key factors, he has a binary score, 1 or 0, for every factor. And that factor is associated with the incumbent. So there's a focus, for the most part, on the incumbent. What is happening to the incumbent and the world while the incumbent is in office and seeking re-election? And if it happens to be a member of the incumbent's party, then that person is treated as the incumbent as well. So after 2 terms, with the first Bush following Reagan, the first Bush would be thought of as an incumbent in Lichtman's model. So 13 keys. And the way Lichtman goes about the analysis is he just sums up the keys. The keys get a 0 if they're good for the incumbent, and they get a 1 if they're not good for the incumbent. And he sums them up. So it's a simple score sheet. And then based upon that score, he predicts whether the incumbent will be reelected or the challenger will be elected. It's fairly straightforward. Not a lot of data science or math, but because he gives us the data, we can make this better. So that's what I did in this analysis. This is a machine learning method called a random forest. So I put all of his binary data into my laptop, and I fit a random forest. And a random forest in this case is a random forest of 500 tree-structured models to predict the outcome of the election based upon these 13 binary indicators. And it turns out that of the 13, 2 are really important compared to the others. So the party contest, is the candidate who's nominated, does he win the candidacy on the first ballot, or at least wins 2/3 of the delegates on the first ballot at the convention? And then short-term economy relates to whether or not there is a recession, during the period of incumbency, and something that's not resolved prior to the election. So those are the 2 most important, and then the other 11 factors come in. Now, you might wonder if this model is useful in predicting the future elections. And it turns out it is. In fact, Lichtman has done this himself using his scorecard. He's done this for elections in the mid-'80s to today and found that it works. But if we use methods of data science, we can do even better, okay? It doesn't have to be a simple score. We can actually get a probability estimate out of the factors. And if we did that using Lichtman's model, we find out that the Biden-Harris ticket, prior to any campaigning, had a 62.4% chance of winning. That was a la Lichtman, implemented with methods of data science. Opinion polls. We've all seen them. Whatever our opinions about them, we know that opinion polls attempt to represent the likely voters. So there's a sampling part of this. We need to do the sampling part correctly, or as well as we can. And what we don't do as well as we would like, we later try to adjust. So opinion polls ask, who are you most likely to vote for, or for whom are you most likely to vote? And they're administered through various modalities: phone, voice response, mail, online, various modalities. You may get different results with different modalities. Sample sizes are usually small, between 500 and 1,500, say. It turns out, even though they have a bad reputation, if you average across many of them, right? If you average across many of them, especially right before the election, they often give you a sense for what will happen in the popular vote. Now, of course, our presidents are elected using the Electoral College. So knowing what the popular vote is may not be the best way of anticipating who's going to win. We understand opinion polls, and these are the base data in 538, in The Economist, and many other models. But we don't have to rely on opinion polls, and we don't have to wait, days to get the results. We can watch the markets. One of my degrees is in economics, and I believe in markets. I think we can learn a lot from markets. And there's a concept called efficient markets that says, in general terms, that all the information that's in the public domain is in some way reflected in the market. Now we know about stock markets and bond markets, markets for securities, where we can actually own part of something. A prediction market is a different kind of market or exchange. In a prediction market, we place a bet on something. We don't own anything in the sense of owning a share of a company or a security. We do own the contract, but the contract in a sense is worthless until the event relating to that contract has actually occurred, or we know what the event was that didn't occur. Okay. Now, in opinion polls, we seek representative samples. In prediction markets, there's no such thing as a representative sample. It's open to bettors. Those could be bettors worldwide. In the market that I happen to use for the Virtual Tout, predictit.org, it's residents of the United States. But these are not a representative group. They're more likely male than female. They're better educated than the general population. They have higher income levels and discretionary income that they can use in betting. And in fact, there have been studies that show that some of these investors or bettors are actually programmed. Okay, they're robots that are doing the betting for someone. But on the positive side, if you believe in markets and you believe in following the money to learn the truth, we have this evidence that every trade is associated with money. The investors or bettors are putting their money on the line. So there's a belief that these contracts or shares that are being purchased are going to be worth more in the future. There's the hope that there will be appreciation in value. And on the positive side, because these are markets that are open continuously, we can gather the data continuously. So instead of a poll that takes place maybe once a week, some of them are take place once a day, we have a continuous stream of information, if we want to access it, that relates to the prices in the markets. So we buy shares in a contract. You can buy Trump or you can buy Biden. We don't own the security. We're investors in the shares. Why would we do this? Well, for fun, I suppose you could do it for fun, but more likely you do it because you'd like to win. For the same reason you might bet on a sporting event. For the same reason you invest in a stock market. Okay, you're hoping that the money you invest will make money for you. So it'll be worth more in the future. Whether you believe in the market efficiency concept or not, it turns out that these markets over time have been shown to be more effective, more accurate forecasters of political events, political outcomes, than pundits and pollsters and models based on pundits and pollsters. They work. Let's try a thought exercise. I'm going to pose two questions. Think about a situation like this. You're a researcher. You have access to 1,000 people. You can ask these people one of two questions. Who would you like to win the election? Or who do you think will win the election? Which of those would give you more information about the outcome of the election? Now, the first question is the kind of question a pollster asks in a political poll. The second question is essentially the kind of question we're asking the investors or bettors in prediction markets. Which question will provide the better election forecast? I would argue that the second question will give you a better idea of what's going to happen in the future. Here's what it looks like. If you go online, predictit.org. This is one of many potential markets or exchanges in which you could trade and bet on an election. And it's showing here, this was about a week ago, I believe, that if you wanted to buy a share of Biden, it would cost you 64 cents. And if you wanted to buy a share of Trump, it would cost you 40 cents. It's also showing us a map of the United States. And as it turns out, in addition to all the states that are shown here, there are markets, within Nebraska and within Maine, so that predictit.org represents all 56 of the Electoral College markets. And it's the prices from these markets that I use to drive the Virtual Tout model. So this is a political stock exchange. And they describe themselves as that. They're based in New Zealand, out of a university in New Zealand. They're a nonprofit. And there are certain things to understand about this market. It is large. Okay? There's about 250,000 registered users. Not all of them are active, but in the current election, more than 100,000 were. So that's a pretty big sample size. Now, it's not 100,000 in any given contract. That's not permitted. I believe there's a maximum of 5,000 for any given contract. But across the many contracts that relate to the election and other political events, we're talking about a large number of investors or bettors putting their money down based upon their beliefs about what's going to happen. Now, there is also, for any given contract, a maximum investment. Now, if you're a high roller, this is a restriction, right? This is something you wouldn't like. But if you're trying to use the data from the markets to make predictions, as we are, this is actually a good thing, because it means that the wealthy individuals cannot come in and control the market or move the market in one direction or another. This $850 per contract means that there will be diversity, a lot of different people investing in each market. Now, it does turn out that there are fees. And some people who are looking at the possibility of prediction markets, especially political prediction markets, as hedges, maybe you're hedging your bets. You have money in the stock market and you want to hedge your bets by having an alternative, counterbalancing investment in another vehicle. These fees would argue against that because they're very high. Commissions on brokerage exchanges these days for trading stocks are going down to nothing, in fact. But here we're talking about a betting exchange, a gambling activity, and the fees are hefty. So when we invest in these markets, we have to take account of that. Think about that. But there are some very good things about these markets, in addition to the general comments I made earlier. The prices are available for all the markets. As it's shown on the right-hand side here, there's a complete set of 56 winner-take-all markets. These are the electoral college markets, 48 of the 50 states. And then it turns out that Nebraska has divided things up into four markets. And Maine has divided things up into three markets. And then there's an additional market because the District of Columbia has a role to play in the Electoral College as well. All of those are represented with separate contracts. And for each of those contracts, you can bet either on the Democratic or the Republican ticket. Now with polls, we would never base a forecast based on one poll. That would not make sense. With polls, we insist on averaging. In fact, we insist upon averaging often the best of the polls, right? We take the polls that are rated at least A-, say, by Nate Silver in 538. So we take a subset of the polls and we average them. In that way, we get something that we might trust a lot more than we trust any individual poll. So a question we might ask is, well, why not average the prediction markets, the prices from one versus the other? If you actually go through the effort of looking at the prices in prediction markets, you'll find that they're highly correlated. In particular, if you were to correlate the predicted.org prices, electoral college market, or more specifically state by state, with the Betfair market odds, or the probabilities you'd extract from those odds, you would get, as I did in one study, something like a 0.997 correlation. So we only really need one of the markets. We don't have to average across markets. They're highly related. And stated another way, there is a limited opportunity for arbitrage, going from one market to another. Also wouldn't want to do that because of the commissions, but there's no opportunity really for arbitrage. There's also a good deal of research about these markets. There's a journal of prediction markets, and there's newsletters like the one that predicted.org provides. So we use the prices from the prediction markets. Now, to help you understand prediction markets a little better, I'm going to work through an example. Take a couple minutes to work through this. And suppose you have $120 to invest or bet. Shares of Biden cost 60 cents, and shares of Trump cost 40 cents. That means you could buy 200 shares of Biden or 300 shares of Trump. Now, you might be motivated to buy the Biden shares if you believe the probability of the Biden-Harris ticket winning is greater than 60%. Likewise, you might be motivated to buy the shares of Trump if you believe that the Trump-Pence ticket had a probability of winning greater than 40%. Well, how much greater, you might ask? How much greater than 60% if you were inclined to bet on the Biden-Harris ticket? Well, remember, there's a 10% commission. If you bet $120 on Biden, that gives you 200 shares. If Biden wins, you get $1 for every share. So that means $200. If Biden loses, however, you get nothing. This is like a sports bet. And now we have to go through the calculations. Let's see, $200. If I won, I paid 120. That means I have a profit of 80. But you can't realize the entire profit because you're charged a 10% fee on the profit. So instead of 80, instead of getting 200 back, I'm going to get 192 back. So I gave them 120, I get 192 back. Oh, not exactly, because when I take my withdrawal, there's an additional fee of 5% on the withdrawal. So in fact, I gave them $120 and I get back 182.40. So my actual winning, assuming I won, would be 62.40. So how high of a probability do I need to buy that 60-cent share? Well, we can compute an expected value. P is the probability of winning. 1 minus P is the probability of losing. I want to compute an expected value that gives me even money, essentially. And I know that if I lose $120. If I win 62.40. So I go through the calculations and I find that the probability is 0.658. So if I see a share for sale at 60 cents, I have to believe that there's a 65.8% probability or percent chance that the Biden-Harris ticket will win. That's the probability that's needed for me to be a rational investor. I want something higher than that in order to be a rational investor. And you could perform the same sort of calculation for the Trump-Pence. In that case, for a 40-cent share, your belief would have to be 44.8%. We're data scientists. We believe in following the data and leading with science. We have these data from the prediction markets. We have the prices, and from the prices, we can easily compute probabilities. In fact, in part, that's part of the genius of predicted.org, is that instead of stating the odds in, say, money lines or something that bettors might more easily understand than typical citizens, they stated them as cents. The shares cost so many cents. So it's pretty easy to invest and understand what the cents mean. The cents, in a sense, translates into probabilities. When you think about models, forecasting models in particular, ask yourself how much of the forecast is driven by the data and how much is analyst judgment. And I would argue that the current models that receive a lot of publicity and are well known in the media have two fundamental flaws. On the one hand, they are heavily influenced by analyst judgment. These are Bayesian statisticians who are putting the models together. They are believers in Bayes, and they're happily establishing their priors. Now, how do they do that? They use their best judgment, and that influences the model that's constructed. That's the one flaw. And the other flaw is using polling data. So the virtual tout, you may have seen it on Twitter. It looks like this. This was about a week or so ago with 1,500 followers. We're over 2,000 right now, even though the forecasts aren't coming out every hour like they used to, because the election is almost over. The counting of the votes isn't. But this is what it would look like on the site. And we would take these hypothetical elections, run 1 million every hour, and then analyze the data from those elections. So the prices drive the hypothetical election. We run 1 million every hour, and then we look at the distribution of those prices, and we take the median, or equivalently, this is the mean, because the central limit theorem kicks in. You describe it as the median, so half of those 1 million occur below the median and half above. And that's the point estimate we give. This was on October 17th, and the point estimate was 312. And from this as well, if we look at the intersection with the 270 line, we can find the probability of the Republican victory and the Democratic victory. Now, if we don't like point estimates, we want to express our uncertainty, then we could easily form a confidence interval using the same data. And here we see the confidence interval, a 90% confidence interval would eliminate or ignore the 5% highest and the 5% lowest, and then find the range of values, which happens to be 251 to 271. And that gives us a 90% confidence interval. It's an empirical confidence interval. So that's just one forecast. But let's follow Samuelson. Okay. Samuelson he wrote the very first economics, the first book I had for economics, my very first economics course. Actually went into 19 subsequent editions. This is a wonderful quotation from Samuelson. If you must forecast, forecast often. So we're going to forecast often. In fact, we're going to forecast every hour. It turns out if we forecast every hour, along with our tweet providing our figure, what we will see is a pattern to those forecasts. We'll see the prospects for the Democratic candidate in this case going up and then going down. You know, right after the first presidential debate, going up. This is the probabilities. And then we could also, of course, look at the predicted electoral votes. So Biden and Trump debate. That first debate that most regard as a complete disaster, certainly in terms of information value, there was very little. But in terms of the candidate's position, there was quite a lot. There was a 6-vote jump in electoral votes. Now remember, we're modeling the Electoral College with every election. A 6-vote jump within 5 hours. Trump announces COVID-19. Immediately, we see a 4-vote jump in that very hour that he made the announcement. And within 5 hours, we see a 6-vote jump. I was watching the data, analyzing the data, not listening to the radio, and I saw an unusual jump. So what happened? I turned on the radio and found out that Michelle Obama had posted her video message. The VP debate, we asked, what was the result of that debate? Well, we might wait 5 days for the polls to tell us who won the debate, but I could tell you who won the debate right away. It was a draw, because for 5 hours after that debate, there was no change in electoral votes. But later, a couple days later, we had the SNL skit. Now you're talking late Saturday night and then Sunday morning. There's hardly anything going on, but lo and behold, we see a 2 or 3 vote jump in the electoral prospects based upon Jim Carrey's playing Joe Biden as well as the Fly. And remember what that curve looked like. There was a peak right around the time of the VP debate, a peak of 94% chance of the Democratic ticket winning, a peak of 326 votes, electoral votes. After that, it was all downhill for the most part, with some minor bumps. Trump came back on the campaign trail, active, doing his thing, and the prospects for Democrats decreased. Now, if you were an advisor to the candidates, you might ask, you might look at these data and give advice about what will happen if you do this or do that in the campaign. And indeed, that's one of the benefits. You can also use, again, I'm going to use machine learning model here, to see how important the various states are in determining the electoral votes. Now, every hour we have the pricing data, and every hour we have a prediction for the electoral votes. Why don't we use those data together to come up with a valuation of the importance of the markets? And here I took the swing states, the key states, the benchmark states. Most of these, in fact, all of these, I guess, are included. Nevada isn't in this list, but 3 of the 4 states that are still uncertain are in this list. And if you ask me, where should I campaign next? It wouldn't just be the electoral votes. It would be electoral votes evaluated with additional information about the variability in the probabilities, variability in the prices. And using a machine learning model, we can get to that. Now, the final forecast just before the polls open, this is what the final forecast looked like. About this time, The Economist was predicting over 90% Biden-Harris victory. 538 was giving a similarly high in the 90% prediction Biden-Harris victory. What did the prediction markets say when I ran it out and ran those forecasts at the end at 3:20 in the morning Pacific time, right before the polls opened at 7 o'clock a.m. Eastern time? 75.7%. The prediction in terms of electoral votes was much lower. And it turns out the prediction markets provided a more accurate, might say, forecast of what actually happened in that election. In fact, if we use an evaluation technology that's popular in weather forecasting, where they're predicting the probability of it raining tomorrow all the time, right? Okay, we can use a Breyer score to evaluate our forecast. If we were to do that, we would find out that the predicted based estimates, which we use in the Virtual Tout, are the best of the ones I looked at. Now, there's a baseline. You can say it's a 50-50 proposition. That's a naive forecast. Or you could use all the information you have from the 2016 election and use that as your forecast for 2020. That would do better than a naive forecast. Or you could take the results that 538 posted on November 3rd and get an even better forecast, or you could do better still and use the methods that I've been showing. Now, what happened to those forecasts? You know, what happened to 538? Okay. You know, this is the model that 538 provided, the very final model. That was their prediction. And now they're trying to explain it. My sense is that we need to look for better data sources. We need to be open to more sophisticated modeling efforts. And as far as the media is concerned, hopefully, draw on a wider range of opinion so that there's some debate, perhaps, in terms of the forecasting methods we use. And I'll wait for questions.
Thank you so much, Tom. Fascinating dive into this method and how it differs from what's been traditionally used. We have one question about how we can update our models to account for traditionally undercounted populations. I think this is asking about better polling, it seems like. And do you think there can be better polling in the sampling and stuff like that that would improve the predictive power?
Absolutely. Now that, you know, I don't want to fault the pollsters because I think they're all, you know, serious about getting a good forecast or getting good information. And there's a long history of this. In fact, if you go on the Gallup site, you'll see their methods, you know, in detail. You know, how they identify the likely voters. There are a lot of questions that they ask to get there. And then how they go about collecting the data, the kinds of questions that are asked for opinions, and also the adjustment technologies that are used. You know, all of those things go into the number that's reported. You know, Biden Harris have an 8% lead or something, 8-point lead. But in every area we can improve. You know, try to get a better sample, more representative sample. And you're talking about unrepresented groups, and that may well be the case. In studies that I did a few years back, when online surveys were just becoming popular, we found that there were differences indeed between the phone interviews and online interviews. Right. So we have to pay attention to that. And as far as underrepresented groups, we have issues in terms of access to media that you need to be aware of when you're doing your surveys. Then the questions you ask. You know, I believe that we can do a better job of asking questions. I gave you that thought exercise, for example. I think we could ask more prediction-oriented questions.
Rather
get a lot better
wishful questions, right?
Yeah.
So here are a couple of questions that I think are related. The first one is, will this model work for the 2 Senate runoff elections that are anticipated in Georgia? And more broadly, do you think this methodology could be applied to primaries? So other races or other political races beyond the presidential election, would the same methodology apply, or would you have to adjust for other factors?
It would not involve the Electoral College, certainly. A big chunk of this model, and what makes it intelligent, is the Electoral College modeling, which is a mechanistic thing. You know, the probability you've estimated, and now you've got the electoral votes. But as far as prediction markets themselves, they are available for many political events, a couple hundred distinct political events. And when you have a runoff election or a primary, they're up there on predicted.org. So absolutely, you could use that. In that case, you have a single stream, and you'd likely want to use time series forecasting methods, of which there are many, to analyze that stream and make predictions about the future.
So with these other races, though, I would expect that the number of people betting on the markets is smaller, or do you find that most of the people bet on most of the markets in something like the predicted site.
Well, if you look at the individual electoral college markets, you are correct. There aren't nearly as many investors or bettors in those individual markets as there are in the nationwide market.
Mm-hmm.
To me, that's a good thing. Yeah, I don't want to be betting on North Carolina. I don't understand anything about North Carolina.
Right.
I want the people who are betting on North Carolina to be informed of it. And I would expect the people who are betting on it to be informed of it.
Mm-hmm.
So a smaller sample size, as long as it's sufficient, it is not so bad, because it means I've got a focus group.
Okay, so it would tell you, it would still be informative in the predictability of who's more likely to win,
Yes.
as long as the sample size was big enough.
Yeah. Yeah. Well, the maximum's 5,000 currently in any given market.
Mm-hmm.
I'd like to see 500 or so
Mm-hmm.
in a given market. I'm guessing that those runoffs are going to have that easily.
Yeah.
Yeah.
So you had the specific events that you had kind of marked on the forecasting.
Yeah. Yeah.
What are some other events, or how do you determine which events to pay attention to, or the ones that are actually influential, or how do you?
Well, some of them are, I can just pull up maybe one of the last ones here. Some of those events, you still have my screen?
Mm-hmm.
Okay. Some of those events I identify in advance. Okay. So I'm saying, okay, this is an event that I know is going to happen. So like for the polls open, that was the last event. Okay.
Mm-hmm.
But I knew that when the second presidential debate was going to occur. Okay. So I know that's an important event there. And I knew this was happening. This became important because Trump made it important, because he walks out of the interview with Leslie Stahl.
Mm-hmm.
He made that an important event. It may not have been prior to his doing that, but the fact that he did that, I really needed to locate that. And then there was this. It was the series was moving up here, and my followers were saying, "What's going on? What's going on?"
Mm-hmm.
So those are times where I go back and say, "What is going on?"
Right. What are the media reporting that might have affected?
What's happening in the news?
Mm-hmm.
What important thing is happening? Lo and behold, the Dow Jones lost 943 points. That's the time it closed. But before it closed, right, there was already movement before it closed, because people were seeing what was happening and they were changing their bets. And then after it closed, more people knew about it.
Mm-hmm.
It became part of the public domain. But you see this overall trend downward, for a number of weeks here, as Trump is back on the campaign trail. And then there are these, isolated events where we see small ticks up. In this case, it's a fairly large tick up, because the economy, that's the big argument, right? If you can't make that argument, his probability of winning goes down. Okay.
Mm-hmm.
And so the bets follow that.
Okay. So the bettors are also following those things.
Yeah.
Here's a question about those predicted participants. How can the predicted participants be made more representative? Because you talked about, it's skewing male and higher income, et cetera, more educated. And if it were made more representative, what do you think the impact would be?
Well, this is a technology that I'm exploring. I call it prediction surveys. Okay. Imagine, instead of having just the bettors, imagine we use a lot of the things that we've learned from, well executed polls, scientific polls, and find representative samples. But then instead of asking them, for whom are you going to vote? We ask them about what they think is going to happen or what they know about the world. And what they know about the world might be related to finances, politics, consumer behavior, what have you. Things that companies want to learn about, things that government wants to learn about. We have uncertainties about the future, but we'd like to do a better job of anticipating the future so that we can make decisions today that are in our best interest for the future. So public policy can be guided by this, as can company decisions, corporate decisions. So I look at prediction surveys, as I call it, prediction surveys. I'm inventing that term because I think there's a value in taking the best of survey technology and the best of prediction markets, putting them together and having a more effective technology going forward. Collect technology for collecting data.
Mm-hmm. Yeah. So I'm interested in, you said, campaigns could use this or guide, right? You had the which markets would be most important, and then certainly campaigns could direct their resources accordingly. So how do you think let's say people starting paying attention to this much more and to your virtual tout algorithms, how do you think it would affect campaigning? And could there be this kind of, effect of, instead of just predicting, it starts to influence? So
it could. By the same token, polls have an influence, right? We hear about them later, and they have an influence. Any kind of information that's available to us has an influence. What this, we're in this world of immediate gratification, right? An information world. But we want the information right away. Mm-hmm. Tell us right away. We're not going to wait for the next issue or a favorite magazine. We're going to go online. We're going to go online, likely on our cell phones, our tablets and cell phones, right? The virtual tout, more than half the users, they're on their cell phones.
Yeah.
Okay, so we want information right away. This is in keeping with that. If you can find out, even mid-debate, right? Which I could give them mid-debate. In fact, I have mid-debate results, okay? In mid-debate, if they had a timeout, okay? I could say, better watch this.
I know that many people, I heard, were refreshing their page a lot on that virtual tout page, trying to what the next prediction was.
Yeah.
So, yeah. Well, thank you so much. We're at 5 o'clock now, 5:01. We so appreciate you walking us through this new and exciting tool. I'm sure people will be following it much more closely from here on out. So thank you so much.
Thank you.
Thank you, everyone, for joining us.